Hey everyone, welcome back to Corporate Decoder, the place where we unpack the secrets hidden in plain sight within company reports. And today we're looking at a filing that signals a brand new beginning for a company that just hit the public markets. And spoiler alert, it involves a lot of units, shares, and warrants. So buckle up because we're about to decode what FutureCrest Accession Corp has been up to in their latest report. Before we dive in, if you find value in cutting through the corporate jargon to get to the real story, make sure you hit that subscribe button. And if you want to chat about these filings or get early access to our deep dives, join our Discord community linked right there in the description below. Alright, let us get straight to it. We're re-looking at a Form 8K filing from FutureCrest Accession Corp. Now, an 8K is usually where companies report big, important events that could affect their shareholders. And for FutureCrest, the big event is their initial public offering, or IPO, that happened on the 29th of September of 2025. Think of an IPO as a company officially going public, selling its shares to the public for the first time. This report tells us that on that September day, FutureCrest sold what they call units. Now, what is in these units, they remade up of different pieces. Specifically, each unit has one Class A ordinary share that is like a regular share of ownership in the company. But it also comes with something called a quarter of a redeemable warrant. A warrant is basically an option to buy shares in the future, and in this case, a whole warrant lets you buy a Class A ordinary share for $11.5. So, for every 4 units someone bought, they got one full warrant. FutureCrest managed to sell a whole lot of these units, about 28.75 million units, and they priced each unit at $10. So just from these units, the company raked in a massive $287.5 million. That is a huge amount of money for a company just starting its public life. They also mentioned they gave investors the option to buy even more shares and warrants. If things went well, and the underwriters, the companies helping them sell these shares, took up that option, adding another 3.75 million units. This brought the total gross proceeds from the IPO alone to a whopping $287,500,000. But wait, there is more. Just at the same time as this big IPO, FutureCrest also did something called a private placement. This means they sold more warrants directly to a few select buyers, not to the general public. They sold 3.5 million of these private placement warrants at $2 each, bringing in another $7 million. A big chunk of these warrants went to the company S sponsor, FutureCrest Acquisition Sponsor LLC, and another portion went to Cantor Fitzgerald and Company, who were the main underwriters for the IPO. Now, here's a crucial detail for a company that just went public through this kind of structure. All the money from the IPO and the private placement, that is $287.5 million plus the $7 million, minus some fees, a total of $287.5 million actually, was put into a special bank account, a trust account. This is really common for companies called Special Purpose Acquisition Companies, or SPACs. The money sits there managed by a trustee, and the company usually has a set period, often 2 years, to find another company to buy or merge with. If they don't the money typically goes back to the investors. So FutureCrest has this massive war chest of cash, and the clock is ticking to make a deal. The filing also includes an audited balance sheet, which is like a snapshot of the company's financial health right after the IPO. It confirms all this money came in. For a company that is basically a shell at this point, just looking to acquire another business, their balance sheet right now is mainly about the cash they've raised. Looking at the company details, they reincorporated in the Cayman Islands, which is pretty standard for these types of entities. Their main executive offices seem to be in New York, and their IRS employer identification number is 98 to 1,871,328. They are also flagged as an emerging growth company, meaning they get to follow some relaxed rules for a bit as they grow. The securities, those units with shares and warrants, are listed on the New York Stock Exchange under the ticker symbol FCRS. U for the units, their Class A ordinary shares trade under FCRS, and the warrants trade under FCRSW. So this is where regular investors can buy and sell these pieces of FutureCrest. So what is the big picture here? FutureCrest Accession Corp has successfully raised a substantial amount of capital through its IPO. This positions them well for their core mission, finding and acquiring another company. The structure with shares and warrants is designed to attract investors by offering potential upside through stock price appreciation and the exercise of warrants. The significant amount of cash in trust means they have a lot of flexibility in choosing their acquisition target. Now, for my take, FutureCrest is essentially a blank check company right now. Its success hinges entirely on its ability to find a promising private company and make a smart acquisition. The biggest risk, as with all SPACs, is the acquisition itself. Will they overpay? Will the target company live up to expectations? Will they be able to execute the deal before their mandated time runs out, forcing them to return the funds to investors? The $11.5 exercise price for the warrants suggests they believe the eventual combined company will be worth significantly more than that. The company also has a deadline to make an acquisition, and if they fail, the money in trust is returned to shareholders. The strategy here is straightforward: raise capital, find a target merge, and hopefully create shareholder value. The strength lies in the significant capital raised and the flexibility it provides. The weakness is the inherent uncertainty of the acquisition process and the risk of a poor merger. We all need to keep a close eye on what companies they consider and ultimately acquire. Alright, that is our breakdown of FutureCrest Acquisition Corp. latest filing. What is your take on this SPAC launch and what it signals for its future acquisitions? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into corporate financial reports. Don't forget to check out the Discord link in the description for further discussion. Thanks for watching, and I'll see you next time on Corporate Decoder.